Welcome back to Investing Talk Podcast.
Today we're looking at First Majestic Silver. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. For anyone following First Majestic Silver, well, the story's really changed quite a bit in the last 3 months. It's shifted pretty decisively bullish.
And this isn't just hype, right? You're saying it's backed by actual performance.
Exactly. It's driven by, record operational facts. We saw huge momentum in Q3 2025.
Okay.
They hit 7.7 million silver equivalent ounces produced. But the number that really jumps out, especially for silver-focused investors, is the pure silver output.
Which was?
3.9 million ounces of silver, just in that quarter.
Wow, okay. And how does that stack up, like year over year?
Well, that's the staggering part. It's a 96% increase compared to last year. 96%.
96. That's huge.
It really is. It marks the highest quarterly silver output they've ever had. I mean, for a miner, showing that kind of jump in production and efficiency, that's the ultimate proof their strategy is working.
Okay. So a surge like that doesn't just happen out of the blue. There must have been a major strategic move behind it, something earlier this year.
You nailed it. The key piece here was definitely the Gatos Silver acquisition. They wrapped that up back in August 2025.
And I remember that.
And it wasn't just about, bolting on more ounces. These were really complementary assets. It let them immediately boost their 2025 guidance. And crucially, it scaled up their processing capabilities. Shows they're serious about strategic growth, not just digging more dirt.
So the integration paid off, leading to these record numbers. And what's interesting is how management reacted, isn't it? They didn't just sit back.
No, exactly. They're actively signaling confidence. It's not just, hey, look how great our operations are. They're using this moment. Well, this record output basically gave the finance team the green light. So in October 2025, they got the TSX approval for what's called a normal course issuer bid, an NCIB.
Right, the buyback program. Explain for listeners maybe why an NCIB is such a big deal.
Yeah, it's basically management putting its money where its mouth is. It's about the clearest signal of confidence you can get.
Okay.
This lets them buy back up to 24.5 million of their own shares over the next year. That's roughly 5% of the public float.
5%. So they think the stock's cheap even after this run-up.
That's the insight, yeah. They're using this peak operational moment to actively buy back shares, telling the market, hey, we think we're still undervalued. It connects the financial strategy right back to the mining success.
We've got the operational engine firing on all cylinders, management's buying back stock. But can the financials actually support all this? Let's look at the balance sheet, the foundation.
And that foundation is, well, it's what really sets First Majestic apart from maybe some other miners in this, cyclical sector. Their trailing 12-month revenue, it's solid, $826.60 million US dollars.
Yeah, pretty good top line.
Yeah, but dive into the balance sheet. And it's the liquidity that really stands out.
So cash on hand, ability to pay bills, what does that look like practically?
Practically. It means they have massive flexibility, tons of resources to cover any short-term needs.
Yeah.
Like a huge cash buffer.
Okay. Any numbers to back that up?
Yep. Quick ratio is 2.84. Current ratio is 3.27. Both are stellar. Basically means zero short-term liquidity worries. None.
That's comforting. But, mining debt can be a killer when prices turn down. How much leverage are they carrying?
And that's the competitive edge right there. Their debt-to-equity ratio. It's only 0.08.
0.08.
Seriously. It's incredibly low for a capital-heavy business like mining. It means almost no financial risk from debt. They're pretty insulated from interest rate hikes. They can fund things internally. It's a massive advantage, especially thinking long-term sustainability.
Okay, that low leverage is definitely a huge plus. But let me just push back slightly here. Record production. Loads of cash. Yet net income was only, $14.74 million? That's a net margin of just 1.8%. Seems a bit low if everything's running so well.
That's a really fair point. And it does show there's probably still room to improve on the cost side, right?
Yeah.
Especially as they're still digesting that Los Gatos integration.
So focus is on volume now, margins later.
I think that's the bet the market's making. Get the scale up, get the synergies really flowing from the acquisition, and then those margins should naturally expand. They're banking on future efficiency gains on top of this huge output volume.
All right, let's shift to market sentiment. What are the analysts saying? You mentioned bullish earlier.
Oh, yeah. It's almost universally positive. The consensus rating is literally strong buy.
And what about price targets? Where do they see it going?
The range is pretty significant. Low end is around $14.25. High end goes up to $18.50.
And the stock's currently trading around, what, $12.44?
Yeah, as of November 1st. So those targets imply, somewhere between 11% and maybe 15% upside from here.
Okay, here's the challenge, though. The stock's already up 112% year to date. That's a monster game. Hasn't the train kind of left the station? Why jump in now at $12.44? Isn't the easy money gone?
That's always a million-dollar question with a stock that's run hard, isn't it?
Oh,
But I think the way to look at it is catalysts. The run so far was based on anticipating success. Now we're moving into the confirmation phase.
confirmation phase.
Yeah. Those analyst targets seem achievable because the next few months are packed with specific events, like actual data points, that could trigger that next move up and validate those higher prices.
Okay, like what? What's the most immediate thing to watch?
The Q3 2025 earnings release. It's coming up really soon, November 5th.
And why is this one particularly important?
Because it's not just ticking a box. Everyone's going to be digging into the details on operating margins, any updates to guidance, basically the hard numbers showing how well that Los Gatos integration is actually working financially. Expectations are high, yeah, but meeting or beating them could really move the needle.
Makes sense. And beyond earnings, you mentioned other events.
Yeah, and this is where it gets interesting for the mechanics of the market. Index rebalancing. Think around mid-December, December 15th maybe.
It's the GDXJ and MSCI.
Exactly, those big ETFs and indices.
Yeah.
Because First Majestic's market cap and trading volume have shot up this year. They're a prime candidate to get a bigger weighting in those indices.
And if that happens?
It means all the funds that track those indexes, the passive money they have to buy the stock, like millions of shares, potentially. It's forced buying, regardless of the price that day.
Creates automatic demand.
Huge automatic demand. It can really drive flows.
Then looking further out, maybe January.
Yep, January 2026 brings the 13F filings. That's when we see which big institutions, which hedge funds, have been buying in or increasing their stakes. Seeing big names build positions always adds confidence. Confirms the smart money is moving in.
Okay, so company results, index mechanics, institutional buying. What about the more speculative stuff? Any rumors swirling?
Oh, absolutely. There's always some fun speculation. Two main things people are talking about.
Lay on us.
First is more M&A. More consolidation. Given how well Gatos Silver seems to be working out, the buzz is they might be looking for another deal, either buying someone else or maybe a joint venture.
And they have the balance sheet for it, right? That low debt.
Exactly. They have the firepower to make a move if the right opportunity comes along, especially if commodity prices dip and put pressure on weaker players.
And the second rumor, the classic mining catalyst.
The drill bit. Yeah, there's chatter about a potential high-grade discovery. Whispers point towards either the San Dimas or Santa Elena mines.
And if they hit something big...
Oh, that changes the game overnight. A major new resource find would instantly boost their valuation, maybe make even those high analyst targets look conservative. That's the lottery ticket potential in mining.
So the story looks strong operationally, financially, and catalyst-wise. Let's just quickly touch on the technicals and risks. No investment's a sure thing. How's the chart looking?
Technically, the uptrend looks pretty solid. The price is comfortably above both key moving averages.
Which are?
The 50-day is around $11.45, and the longer-term 200-day is way down at $8.90. That big gap shows the trend has strength and good support underneath.
So based on that, what's a reasonable trading range to expect, say, over the next 3 months?
Well, barring any huge surprises, we'd expect it to consolidate and trade probably between $12 and $14.50. But there's definite potential to break higher, especially after earnings or if that index rebalancing news hits.
Okay. And the downsides, what are the main risks investors need to watch?
Number one is probably geographic concentration. Most of their mines are in Mexico.
Right. Political risk, regulatory changes.
Yeah, exactly. While they seem to manage it well, any unexpected shifts down there could definitely impact operations or costs suddenly. It's just a factor you have to accept, with miners focused on one main jurisdiction.
And the other big one, inherent to the business.
Silver prices themselves, of course. They produce a commodity. Their profits are heavily tied to the price of silver. If silver takes a dive globally, their earnings will feel it, no matter how efficient they are.
But that low debt helps there too, presumably.
Well, massively. It means they can weather a downturn much better than heavily indebted competitors. They won't be forced into bad decisions just to service debt. So, wrapping it all up, what's the takeaway for someone considering First Majestic Silver right now?
Look, our overall view is pretty bullish. We'd rate it maybe an 8 out of 10.
An 8. Okay.
Yeah, because you've got this rare combo, record production growth meeting strong fundamentals, especially that low debt and high liquidity, plus a calendar just loaded with potential near-term triggers.
So good for different types of investors. I think so. It looks interesting for maybe shorter-term traders playing that earnings catalyst or potential index inclusion news, but also for longer-term investors who want exposure to silver, especially with the macro story around, renewable energy and industrial demand growing. It sort of ticks both boxes right now.
The elements definitely seem aligned for more upside. I suppose the real long-term question isn't just hitting $18, but whether that strong balance sheet lets them become a major consolidator in the silver space during the next industry downturn. That could be the bigger prize down the road, something to keep an eye on.